Good afternoon, friends. Okay. So, we have taken Monday's low. Wasn't expecting that. But we will continue to watch and see what price has to deliver for us. I've marked out some sell side levels. We have they're really far away, so I need to show them on the daily. I have this daily wick consequent encroachment, this long wick, and then I have the low of it, which I highlighted as some sell side liquidity. We have this daily fair value gap. It's a little hard to see. The fair value gap is actually from here to here, but this is the part that's left open. So it's the unfilled portion. So that's what I have highlighted as left. Then we have the consequent encroachment of a weekly wick. I'll show that. But if you look on the weekly, we really just have wicks up until this weekly fair value gap. So on the weekly, we have this swing low. This is a swing low where the sell side is. Then we have the weekly consequent encroachment, and then we have this weekly fair value gap. Going down to the daily, I just added that small daily fair value gap. And yeah, so those are the levels we have outlined to the downside. In the morning, or in the lunch, you can see, so this morning we took a trade from this inversion fair value gap up to this breaker, or this new week opening gap. And then I logged off promptly, but you can see we respected the breaker, came into it. It was a 5-minute breaker, so if you look at it on the 5-minute too, it looks even nicer. The 5-minute, you had this wick, came down, candle bodies barely closed inside of it. This would have been a really nice short. On this channel, I do not trade outside the hours of 10 to 11 and 2 to 3/3 to close, 3 to 4. Anyways, so I logged off. This would have been a nice short though. Short down, and we came right down at 1 to take that Monday low. So on the 15-minute, this was the low. Sell side from Monday. I really thought that we were going to wait until Powell spoke to take that low, but I was wrong. And here we are. Interesting. You know, what this price run is really stemming from is this just very bullish dollar. If you look at the dollar on the daily, so after coming down through this daily fair value gap, sweeping liquidity, yesterday we had this huge bullish candle coming up, close inside of it, but then today it's really running away from this daily fair value gap. You know, you can see us taking these 1-2 daily highs. Looks like it's going to go for these buy sides eventually, but going for these buy sides will definitely have the indices falling lower. So I think that was the catalyst for us taking that Monday low. We're up on the day. We're also really up on the month too. It's been a good month. I want to close out this month strong. I still don't know if I'm going to call next week like an October month, because Monday and Tuesday are still October. Let me see. Yeah, either October or September is going to have to get 5 weeks in it. Yeah. I'm gonna pick September is gonna get 5 weeks in it. So that'll be exciting because I do plan on sharing a video that I will be sharing my personal journal, and I will kind of show how September trading went and how October trading went. And I think that's going to give a lot of really good insight. I think that's going to be a great video. So I want to make sure that I close out October strong, because where we stand right now, it's strong. But remember, the hard part about trading is you can give it all back in one day. And that's why everyone talks about risk management. But yeah, so just want to make sure we close out October strong so I can make that video. But in terms of trading the silver bullet, I probably have to do, it's going to be a downside draw. I mean, we're closing a downside day. I really thought we were going to, I don't know how many times I'm going to say this. I really thought we were going to wait until after today or tomorrow for this placement. It's kind of making me a little nervous that we're taking this low right here prior, because I don't want it to be a scenario where we're actually taking this low as liquidity, and then off the news aftermarket today and pre-market tomorrow we send it higher. But we are forming a down close day, so we will try and look for continuation to the downside unless we see a pretty aggressive run up. So if you notice this morning, I was able to catch a play to the upside, but you know that was kind of against the daily draw, the daily print. We're printing a down close candle, and I took a long, which isn't a bad thing. It's one of those things where you really have to know and be confident. And you know, if this does that, then I know it will do this. I outlined that in the live trading this morning, and I plan on doing a market review video later today. But you can see, so we took this long, but the real draw, like if you were trying to capture the daily range, was, and again, you know, we might be able to find a scalp to the upside, but your better trades are going to be trades that are going with what the daily candle is printing. So for example, if you were to enter shorts up here, it's a great area to enter shorts on this breaker. You could have rode this beauty down, but again, that happened outside of the trading model that we're trying to display in this channel. So that is that. We'll see. In terms of retracement, so maybe what we'll do is we'll find a nice level that I think it can get back to, and that would make sense going short from. What would that level look like? I feel like it would be here. Oh, wow. I was hoping that would at least be some kind of up close on the 1 hour. So we do have this hourly fair value gap here, and in that hourly fair value gap, see this wick, it's really a down close candle, but you have these up closes on the 15. So let's see. Let's highlight, I'm going to highlight the hourly, and then I'm going to work down. Find more specific inefficiencies. So you can see we have these up close candles. We have a little bit of a volume imbalance there. I don't really trade those. Then in the 5 minute, you can see these up close candles. Not much in the terms of inefficiency in this delivery, really. This downside delivery. We'll see. This is nothing super clear right now. Remember, we're printing a down closed candle for the daily. So I'm keeping this red line, this previous day sell side liquidity. I want to keep that on the chart because I want to know if we're below it or not. Because if we start to get above, you can see, wow, it's actually pretty nice. To the tick, our candle bodies respected it. If we're respecting this level and we're staying below it, then I do like downside. But if we start to come up and show a willingness to retrace, then remember what this is this red line is the bottom of a wick. Here's the consequent encroachment of that wick. So the daily price, I said this morning in the video this morning, just because we call out a daily consequent encroachment level doesn't mean that at 10 a.m. it has to stop on that line. It can come all the way down and then finish the day right up here. And on the daily, remember, if you're mapping out daily levels, you have to keep, and you have to watch that daily candle that's printing and know that the context is on the daily. So we could come up here and close on this line, and then on the daily, our candle body respected that consequent encroachment. It doesn't have to respect it right at 10 a.m. So that's another reason why I would keep these consequent encroachment levels on here, because if we do start to see upside, just think about it in your head. What's happening is this body is closing and respecting these levels. So that's that consequent encroachment is actually the 15-minute. You can see we came down right there. Looks like more of them. It's a mean threshold of that order block. Okay, so interesting. Watch price. Nothing's too obvious right now, so just gonna kind of read and digest price. We're up on the day. No need to force anything. Gonna look at NASDAQ. see that on ES. That wouldn't have been a bad entry. Let's see. It would have been a tight stop right at the top of that candle. It was also tapping into a 5-minute order block. I mean, fair value gap right here. 5-minute fair value gap. I like how it came and really just touched the bottom of this swing low. Let's see. If we do go lower, you'd want to see this act as an inversion. You want to see it cut through this, not respect it. And give it a chance. I like how on this high we came right up to the bottom of this swing low, which is also the bottom of that liquidity. And we displaced, came back up, respected this fair value gap. See what the dollar is doing. Nope. Dollar is going down. So I should have looked at that in the beginning. Yeah, so remember, you don't want to be taking a short if the dollar isn't on your side. The way this dollar looks like it's going, I would actually kind of like longs. You know, you saw us. So 1 minute fair value gap inside this 5 minute. We came down, tapped into it. This candle body opened right at the consequent encroachment. Shot up. Dropping dollar. Again, so things you could do is target. I would take my first 5 handles, but in terms of targets, you could target the consequent encroachment of this wick, which is also lines up with this 5 minute swing high pretty nicely. I want to see this stay open. If it's really going up for liquidity. Yeah, so after taking this high, I probably still wouldn't be entering shorts. Look at the candle bodies respecting the consequent encroachment of this daily wick on the hourly chart. See what it looks like on the 50. Yeah, so on the hourly chart, our candle bodies are respecting this consequent encroachment. It's hourly and the 4 hour. You can see that right there, that consequent encroachment. This is a 1 hour consequent encroachment. That's why I kind of lost track of where this was. That's why I always put the time frames on. 1 hour consequent encroachment. This also lines up with this 1 hour fair value gap that we talked about. Little fair value gap entry there. That could be our silver bullet. Possibly. What did this? Did this deliver 5 handles? Did not deliver 5 handles. Still some room to go. You can see the wick came down, filled in to the bottom of that fair value gap nicely. Went higher. Dollar's still going down. ICT tweeted about the quarterly shift objectives on ES and NQ. And I do have to admit, I did not write those down. I was kind of looking through the comments, and it seems like the consensus was that it's lower. So it seems like on Twitter he called out more downside. Something I would like to see for downside is if we came up and wicked above these highs and then displaced lower, just engaging buy side liquidity. Damn, this is kind of boring. Trading is boring. Dollar still seems to be making some new lows, so if you were to enter on this, it's not looking too bad. Wondering if this is going to act as a breaker, this high, low, higher, high on the hourly. So you can see our last hourly candle was the first hourly candle to close below. It's a pretty large breaker, but you can see that's right where we're stopping right now. Printed in a new hourly candle, coming up and touching this breaker for the first time. I would, if we accelerated to the downside, I would like to find an entry going off of that narrative. You'd target that's daily wick low, this other red line. That would kind of be doing exactly what we did this morning. So this morning, I ended up, what I did was I ended up taking a long off of a pullback, came up, tapped into this breaker, and then it continued. So I'm going to see if we can possibly do something similar. So that was a breaker on the 5 minute. This is a much larger time frame breaker. It's a breaker on the 1 hour. But again, I'm going to use that. I want to see confirmation that we are turning around. So I want to see some shifts in market structure. See the 15-minute candles kind of also respecting it. Yeah, if we got below this fair value gap. And remember, the dollar would have to be rising. I don't want the dollar making another low. Honestly, what I want is I don't want the dollar to make a lower low than this. And I've said in the past, it doesn't have to go 1 for 1. So just because this is the low in the dollar and this is the high in the indices, it doesn't mean that they are like perfectly have to be inverse. You know, it's not like, well, it's not like if we want to take this low down here on the indice that the dollar will inversely take this high at the same time. It's not 1 for 1, but we will, seeing this high be taken on the dollar, if we are below or right a little bit above this swing, I would like that. It'd be a shift in market structure on the indice and the dollar, with the context of we are targeting this sell side liquidity pool. ICT called out that weekly objective, or the quarterly shift objective. That kind of lines up with what we're thinking. We'd be using, given the context of this breaker, as this turnaround point. I like how the 5 minute even is kind of bumping up into it. But again, we're going to want to wait until we're a little bit lower, because right now we could, I don't trade the breaker. The breaker isn't our model here on this channel. So we're not going to just immediately enter on this breaker. You can use it to lend your narrative. You can use it to help paint your picture, but it is not what our entry model. And again, this is an hourly breaker too. So this hourly candle, we still have another, we're not even halfway through this hourly candle print. It could come run all the way up here and then sharply reject it. And remember, like keeping the PD array in context to its time frame, hourly PD array, we would want to see the hourly candle respect it. We can still see the hourly candle do a whole lot up here and then come back down and still respect it. So I'm not going to enter a trade right off this breaker because of that. But I do think even if we have these lower time frames, like the 15 minute and the 5 minute, respecting it when we do, I think that lends even better that we are on sides if we do happen to turn around. Yeah, after framing that breaker, I wouldn't have wanted to been long off this fair value gap right here. You would have got 4 handles. See the dollar going for that high. Again, I feel really confident that we were going down here if we started closing candles below this swing low. I think you could enter before it. I don't know if I'm gonna. Kind of going back to that whole trying to close out October strong. We'll see how it prints. I would definitely not enter if we were above until we close below this. I want to see us come below it and use it as an inversion. You could also see this kind of retracement continuing, kind of going back to that whole narrative of, you know, a lot can happen in this hourly candle print that would stop you out if you were to go short right now. But I do like the way the 15-minute candle closed and the 5-minute. The 5-minute, we want to see how these next few 5-minute and the next 15-minute candle prints. So we still have a lot of time left. Like you could see it run up here sharply and then sharply drop back. You could have like one 15-minute candle. You could probably do it in one 15-minute candle. I guess you could have called this a silver bullet. It was a fair value gap that delivered. Wait, I don't know if we already went over this. Yeah, it delivered 5 handles. The thing is, though, usually the silver bullet, you'll have, like, it's on its way towards a draw of liquidity. So there's really no obvious draw of liquidity that was kind of run for. I would like to see a fair value gap entry targeting this daily low. I think that would constitute a more valid silver bullet. Okay, so you can see us came up and our candle bodies respected this fair value gap as an inversion. Boom, boom. Came down, closed the body below this fair value gap. I want to see this candle body respect it. Okay, it didn't, but we'll still wait. Another reason why I said I wanted this swing low taken is because, look, we came below this fair value gap and we closed below it, and you could have easily had the mindset of, ooh, I'll like enter on the retest and use this. I'll enter on the retest. And then look, you would have got, I wouldn't say you would have got stopped out, but it would have did some stuff that would have made you would have been a little hairy. Okay, interesting. So you can see the dollar, it's not taking that low, but it's getting close to it, and we're now heading to the downside. I also want to see this low taken because it'll just be a shift. It'll be a swing low on the 5 minute taken. I like that. I'd watch this 5 minute wick levels. I like that. Just I want to see it disregard the consequent encroachment. Act like it's not even there. Okay, we got to close. Okay. I like. Okay, we've now broken below that. That is enough to start some downside. I like how the dollar looks like it doesn't want to take that low. I'd like a close below this low. Let's see, we got. See how it closes. I would want a 5 minute close to feel confident. We still got about 3 minutes left in this 5 minute candle. That would have been a good entry. Let's see. Yeah, there it goes. I'm gonna wait on that. No need to do anything. Just because, see how this, we're closing out this 5 minute candle. I don't know. I wish the dollar was making higher highs. See how the dollar hasn't made a higher high yet. It's kind of, let me look what NASDAQ's doing. NASDAQ came below. Yeah, if the dollar was making a higher high, I'd like that a lot as an entry. But it's continuing this downtrend. And remember, I said I wanted a 5 minute close below this wick. And don't forget, we have Powell speaking at 4, like after the market. So what could happen was, you know, we could have our draw on liquidity correct, and it could just wait until 4, hear what he has to say, and then boom, hit it after hours. Like similar, let me show you this. What day was it? That was this morning. It was yesterday. Look at this. So we took a long yesterday, and I was really just targeting this high, but there could have been people, you know, the draw on liquidity is the high of the day. That's what they would have said. We took this high. This is the next one. Look what happened. It literally just kind of barcoded, and then right at 4, you have these huge up close candles, and then just it got rejected. Like, so you can tell that was the draw on liquidity. It wanted it, but it happened at as the market closed. So like that's another thing you have to be like, that is a scenario. Know that. So that's why, like, keep something like that in mind when if you're like feeling really antsy to take a trade. I mean, it's easy for me to say because I walked away with a win this morning, but you know, demand more from price. So for example, we had this candle body come up and closed above the fair value gap. I mean, your stop would have been, it wouldn't have hit your stop, but it's showing you that it's not being super precise. Demand more. And then even know that, you know, it could have been it can be a scenario where, like, if we entered at the bottom of this fair value gap, put our stop here, it ends up running, you know, could be that. But if you keep taking sloppy setups, it will eventually come against you. This downside is looking in play though. Not bad. We would have needed this low to be taken out for our 5 handles. We would not have had our stop hit. Our stop would have had to have been at least right here. But, you know, something that ICT teaches is when we return to an inefficiency, if it leaves a portion of that inefficiency open, so say this big white candle was never here, and the only entry into this inefficiency was this one candle right here at 237. If it then broke lower and it left a portion of this fair value gap open, ICT has said, then it really wants this sell side. It wants it so much that it left part of this inefficiency open. So in my head right now, I'm thinking, if we didn't leave part of that inefficiency open, it doesn't want it that badly. So even if you are in this trade right now, how's it going to deliver? It might deliver like really slowly. I think if we start coming up on the dollar and taking some of these highs, though, we'll definitely get it. It's not the worst delivery right now. Remember, this yellow line is the dollar on the 1 minute in the background. You know what it is? Look at it on NQ. That fair value gap on NQ was a lot cleaner. This was the same fair value gap. The body's closed barely below consequent encroachment of that fair value gap on NQ. And it already delivered the minimum, whereas ES still hasn't. Okay, so dollar is finally making a higher high. So the candle bodies respect the fair value gap. Again, I'm not too interested in trying to take this short just because what I said right here, you know, we had this up close candle close in this inefficiency. So it doesn't seem too rushed to take this sell side. If we had just tapped into this fair value gap once, sent it lower, made another fair value gap, and I would have probably entered on that one. Even at the retest, I mean, this isn't a terrible risk to reward. You'd enter there. I'd put my stop now above this up close candle. So it'd be like a 2-handle stop for like a decent downside. But I'm gonna hold off. Yeah, so if we keep continuing this dollar above this high and then above these highs, it'll definitely start to come down. Let's see, NASDAQ looks like it's almost taking that low. Would have been a nice play off the breaker. Dollar about to take these highs. Could also be a high of the day for the dollar. So it's pretty one-sided. I think it's one of those situations where I would not see any type of upside coming unless we really reversed. Like the draw is definitely down. I just don't really know how it's going to deliver there. NASDAQ took its low already. You can see it. NASDAQ already did. If you look, the dollar went right up even with that high. Hasn't passed it yet. And this yellow line, the dollar, I believe it's the closing price. So, for example, you can see this corner, all these highs are where it closed, I'm pretty sure. So there could be a wick above here. Just something to point out. I would have still kept my stop loss at the original position. Just right above that candle. Ugh. Yeah, so that wouldn't have been the best trade to be in. Good job staying out of that one. You wouldn't even have got 5 handles. It would have been like hugging your stop loss right now. You would have got 4 handles. It delivered on NASDAQ though. It did deliver on NASDAQ. I guess what I would call the silver bullets was that for this session. That was her. I don't know why. I should have, in hindsight, it wouldn't have been a bad idea to try and take that fair value gap after this breaker. In hindsight. I know it's a little hard to see, but you can see the dollar just went a little bit over that high, and now it's turning around. So I wasn't able to follow through the high. I am battling with the idea of, on days when, or on like sessions, so when I came on in the PM session, I kind of already determined that I wasn't going to take the trade. Do I just actually stay on here and do nothing? Or do I just not even come on? And I've been coming on and doing nothing because I do want it to kind of highlight that this is things that will happen in your trading journey. There has to be days where you come on and just decide to do nothing. It can't be every time you look at the screen you take a trade. At least not in the beginning, Yeah, I'm definitely not really interested in trading anything. We shouldn't have had this much of a retracement if it did want this sell side. So I think what's happened is it's just kind of being suspended for when Powell speaks. NASDAQ did take that low though, but I'm not going to trade any upside. And as you can see, trying to trade the downside, I mean, you can do it. You can try it. I'm personally not gonna. I don't think it's too high probability. So there we go. I think I will try and do a market review and explain this morning's trade, this morning's silver bullet, and then kind of talk about this afternoon and the market structure. I've been thinking about trying to make two types of videos, just the live trades and then a shorter version of the market review. I think that might be a little more digestible, just shorter things. because I think some people might not want. Well, I always put the timestamps in the video so people can just click right to the trades, but I feel like it might be a little overwhelming when people look at the channel and it's like 2 hours and then it's 2 hours, no trade taken. So I think I might start doing market reviews and try and make them like 10 minutes long. And I'll break down the trade in hindsight. And then I'll explain this in hindsight because I think this was the silver bullet. And yeah. We got Powell at 4. We got GDP tomorrow at 8:30. I will be on tomorrow. Enjoy the rest of your day, guys.